Welcome back, my friends. This is 3 at 3. This is where we break down unusual option activity for you. I appreciate you being here as always. We're going to dive right into today's 3 at 3 right about now. So here we go. 3 at 3 presented by me, Jon Najarian, and of course brought to you by MarketRebellion.com. It is the 13th of October, 2020. My brother Pete was on the halftime report today. I will be on the halftime report tomorrow. For those of you pinging and asking me, thank you for asking. As far as our disclaimer, the disclaimer is that all investments involve risk, and you need to choose your investments. This is presented for informational and educational purposes only. Full stop. Intellectual property rights, patents, trademarks, registered marks, copyrights are all part of the presentation you're about to see. So please, before you maybe take some of the slides and use them, tweet them, or otherwise, ask us first. And then, of course, cite MarketRebellion.com. Thank you so much for your support, folks. Yesterday, we talked about Cloudera, and it gave us some support today because rumors circulated about a possible takeover. Now, that could be, the stock did pop. It popped into the 12s and pulled back a little, but I want to show you what the options did. So, the October 12 calls, as you see on the screen here, we talked about those a week ago, a little over a week ago, I guess. When the stock was $11.25. Yesterday, I talked about it on the halftime report, and those are the next week expiring, not this week. The ones a week ago on the 23rd, that was this week, regular October 12s. The other October 12s expire next week. So those are the ones I was talking about yesterday, and those moved all the way up to 95 cents today. Bang! Doubled our money, folks. Because I paid, what did I say, 35 cents to 40 cents in that range yesterday, and they traded to 95 cents today. So I took off half because that is the discipline that I try to employ all the time. When an option doubles, I try to take off 50%, let the rest go. I am still in the other 50%, folks. Should I have sold all of it? Yeah, maybe, but I still think that we've got time and maybe something else plays out. And maybe there is a little something as the market softened up today that pulled Cloudera down that might be just the opposite tomorrow. Let's see. Final trades also yesterday, Datadog. How about this one, my friends? This one, woo! Stock was 112.37. It was already up a little. Well, how did it do? Let's see. Datadog. We cited it yesterday. It was 112.57. I did it on the halftime report, 112.37, nearly $2 higher. And then today, bang, 117.30. Cha-ching. That, my friends, is why you trade options. That's why I love this game. You want to learn more about how you can join this game? Check it out. MarketRebellion.com/get started. That is MarketRebellion.com/get started. Whether you are a novice and maybe just jumping in for the first time through E-Trade or through Robinhood or one of those discount brokers, or whether you're an experienced trader, we've got something to help you become a better options trader, become a better stock investor, become a better futures trader, or cryptocurrency. A lot of cool stuff coming your way in our cryptocurrency room right now. So check it all out at MarketRebellion.com/get started. Now let's get started with the presentation. Unusual activity, UOA, coming your way. Verizon. All right, now watch this. Because, of course, Verizon and AT&T are tied very closely to Apple. Why? Because the new 5G iPhone, the iPhone 12. Look at that. They bought 10,000, which is 1 million share equivalent, 10,500 of those October 23 calls. That's October 23rd, next Friday, not this Friday, next Friday. 60 calls bought for 44 cents up to 90 cents. That means $44 up to $90. So a 1,000 share position you would simulate by buying 10 of these calls. That would give you the right to purchase 1,000 shares of stock at the 60 strike, just above where the stock is trading. Now, for that right, you'd only pay somewhere in the neighborhood of 44 to 90 cents. That's pretty cheap. Again, you do it for 100 shares, so that's $44 to $90. A 10 lot would be $900. I spent a little more than that. Now, why would we trade this one? And why did the stock move like this? Whoops. Guess I didn't get that one. Sorry, folks. Must have done a bad job copying my slide there. Sorry. But it basically went like a heartbeat up and down around the conference today. That's what happened over in Verizon. Sorry about that slide. Hopefully the next one works. JP Morgan, bullish call spread. Stock announced earnings, traded up 2% in the pre, sold off by the time we opened. It was still up maybe 50 cents to $1, close to $1 at times, and then sold off, bled off, if you will. Now we see somebody stepping in and buying 1.2 million share equivalent, because 12,000 options is 1.2 million share equivalent of stock at the 105 strike. So they paid $2.48 for those calls at the 105. They collected 56 cents for the 115. So let's say rough terms, they paid $2 for a spread that can go to 10. They have 5x. And of course, if the stock just kind of meanders up, they could make a nice profit on this as well. Doesn't have to go to 115 to hit that home run. They'd be pretty happy, and I'm sure I would, on a double here. And I like JP Morgan. I liked what Jamie said. I liked what they did. Watch this one. And that slide worked. JP Morgan Chase, as you see, back and forth across that line, basically 150 cents, give or take, up, down through it, up, down through it, up, down through it, bounce, 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 right here, $100.43 right now. That is the second of our 3 at 3. Let's get to the third right now. Third is space, which is Virgin Galactic. Virgin Galactic, folks, a very good company that we've had very good luck with when we've been trading this one. So I encourage you to check out the October 21 calls. These are calls that are, as they say, in the money. Why? Because the right to buy it at 21 when the stock's trading 21.23 is worth 23 cents. The rest of that is the premium built into the option because of all the various hedging that has to be done when the person that sells you or me that option creates that option out of thin air. So 7,600, that's 760,000 share equivalent at the Oct 21 strike. These calls expire Friday. So you've got 3 more sessions, Wednesday, Thursday, Friday, 3 days for you to be right in this trade. They paid 29 cents up to 88 cents. That is $29 rather, up to $88 for these calls. I am in the calls, and I'm not in sometimes when they're saying, oh, the 25s were being bought. Well, then I would buy the 21s if the stock was 21.23 because I want to be closer to the money. I want to protect myself as much as possible. I am in these calls, and I will write higher strike calls against it if it starts to work to the upside. 21.23 is where it was when we saw this at 11.42. 21.58, so still in that same range, up about 5% on the day. There you see the one-day chart. Bottomed out just before 10 and then moving throughout the day. So that was in the first half hour. It bottomed out near the 10 a.m. hour and has been moving up since. I am Jon Najarian, folks. If you'd like to learn more about trading unusual option activity, if you're somebody that could trade 20 trades or more a day, you should be in our elite room. If you're somebody that only wants maybe 1 or 2 trades a day, we have a service for you. If you're somebody that only has time for 1 trade a week, we have a service for you. You can check out all of our offerings at marketrebellion.com, and in particular for unusual option activity, marketrebellion.com/UOA for unusual option activity. All right. I appreciate you joining me as always, folks. I hope you have a great day. And let's take it out with a little Aloe Black once again. Thank you. I'll see you tomorrow, folks, on the Halftime Report, noon Eastern Time. Bang!